Good morning, ladies and gentlemen. My name is David Breer, and welcome to episode 83 of the 11FS Fintech Insider Breakfast Show. In this show, we bring you the best and the brightest from around the fintech and banking landscape every single weekday, straight into your homes at 8:30 BST, here live on LinkedIn. Today, I'm super duper thrilled to be joined by Felicia Meyerowitz Singh, who is the co-founder and CEO of Akoni. On today's show, what we're going to be looking at is how the wealth management space has really been changing very rapidly over the last couple of years, and actually how Akoni are looking to really spearhead that and make this really happen in the industry. So good morning, Felicia. How are you doing?
Hi, David. Delighted to be here. I'm very good. I'm very impressed. All your listeners are up at 8:30.
I know, right? I mean, we're a dedicated group of people who want to hear the best and the brightest, right? So yeah. It's nice that people kind of make an effort. And I mean, I should say as well, it's like it's 8:30 in the UK, but I mean, just looking at the comments already, we've got people from pretty much all over the world. So it ain't 8:30 everywhere. So thank you very much, everybody, for joining us. What we will say is, I mean, the opportunity over on LinkedIn, if you've got any questions, if you've got any anything you want to bring up, drop the comments in. We'll weave it into the conversation as we go. And I mean, half an hour is going to fly by, I have to say. So first up, can you tell us a little bit more about Akoni? What do you guys do?
So Akoni is a cash marketplace and cash platform. We essentially automate the movement of cash to manage the risk of it. In particular, in the post-COVID world, everyone's concerned with the risk, increase the returns, but really more importantly, just take away all the friction and all the lack of transparency that's in that market. And just to put it in context, your financial advisor will move your investment assets per your mandate, and you'll never even know about it. Why is that so easy? But actually moving cash, which is the simplest of all assets, is incredibly difficult. Yeah. So we overcome that problem, and we really are like the marketplace within your marketplace. We're an API first company, and we seek to work with our distribution partners, so wealth platforms, advisors, retail distribution in a whole array, as well as in the SME space, but our primary targets are wealth and retail. And we can do that everything via API, including the anti-money laundering and KYC. And that's really where we see the future, is that the retail market is congregating towards specific ecosystems or their own marketplaces. And there will be curated products, curated content within that environment. And we provide the cash related tools for that.
Fantastic. Well, it's like I say, if you're delivering that from an API perspective, then actually it's a very easy thing to integrate with as well, isn't it? And actually, yeah. I mean, that model, as you say, that sort of almost the bifurcation of product creation and distribution, the distribution isn't necessarily just the big incumbent organizations, is it?
No, there's an entire range. So I think, so in the wealth sector, for instance, you start with what we call the giants, which are the software providers like Bravura, SS&C, FNZ, and they then service the wealth platform market, of which there may be in the UK around 30, 35 players, and it's consolidating, you know, from an innovative player like Embark all the way up to very large scale like Aegon. And then they provide solutions for around 6,000 financial advisors, firms in the country. So each one of those have got their own requirements. They're at their own stage of growth relating to whether they can digest APIs. And then, of course, we've got the retail market, where there's a massive gap in terms of cash savings in every respect. There aren't solutions in the market that help the average retail customer. And that's historically because the costs of moving cash are so high. You're driven all around anti-money laundering, opening accounts, filling out forms, and so you have to have something that overcomes that, but in a white label way. We also work with a whole range of very innovative fintech players like MoneyHub, which is one of the other leaders in the wealth space, in employee benefits, getting to those markets as well. So we distribute through a range of channels.
Very cool. Tell us a little bit more about the background then. I mean, what led you to start Akoni in the first place?
Yeah, so I used to be a CFO, a finance director in the London insurance market, the Lloyd's market. Okay. And we were mid-size. We managed a lot of cash, but not enough to qualify for a bank's treasury function, but too much to do nothing. So we couldn't hire our own treasurer. We couldn't get a treasury management system. Our bank wouldn't help us. And when I say wouldn't help us, literally, I'll never forget this one call with one of the big four, who shall remain nameless. And my finance manager gave me the phone and said, you talk to the guy. And I said, you know, we've got 50 million, we need to place it. And he said, well, it's just that we can't do anything because we only deal with more than 100 million and we do this, we do that. And I said, so what do you suggest? And he said, well, maybe take it down to your local branch. And so I was like, what, in a briefcase? And they were like, I just can't suggest anything else. It was one of those bizarre conversations where you think, this cannot be real.
That's crazy. And, I mean, we hear so often about the, you know, the branch being a safety net for, you know, application forms or, you know, going in and signing something, but not just carrying 50 million through the door, is it? That seems seems a bit unsecured, doesn't it? Yeah.
And that was what really, I then actually thought, because I'm aware of all the treasury management systems in the market. So I thought there must be like a miniature TMS, which could essentially enable companies like mine, because we managed our own cash and we managed a lot of cash on behalf of, like under CAS rules, client money rules, and on behalf of insurers. So for individuals like you and I, we would have been managing that cash without anyone realizing it. And I spoke to other CFOs and no, everyone was like, no, we can't do anything. There's nothing we can do. It's always been this way. And that was really what prompted me to think, well, always been this way is really not the answer for anything. It's a very strange thing. I started thinking about the kind of solutions that would be out there, how you would structure it from a regulatory perspective, because that's very critical to this proposition, is you have to make, it's like the duck gliding above the water and paddling below. It has to be very graceful for the consumer. Their entire customer experience must be simple, easy, like, you know, lacking in awareness of the complexity behind the scenes. And then I met my co-founder, Panos. He's the tech, I'm the fin. And I said, well, look, this is what I think is possible from a structure perspective. Can we do this from a tech perspective? And you know, really in this day and age with data and technology being what it is, we should be able to personalize solutions for everyone. For you and me, for someone who's got £100, and for a small business or a charity.
Yeah, it's an interesting one, isn't it? I mean, when banks are leaving so much opportunity on the table just because of the way it's always been done, it's a really interesting one, isn't it? And I think, I mean, co-founder at 11FS, Jason Bates, always says the future is already here. It's just not evenly distributed. So, you know, wealth management actually rolls down to you know, everyday retail, and corporate management rolls down to SMEs because of the facilitation that we can do with digital. You know, digital can kind of replicate these models, replicate those experiences. But I mean, this model, like that big gap in the middle there from, you know, small organizations to corporates, if somebody between, you know, 40 to 70 million can't get service, that's just insane, isn't it?
Yeah, it's insane. But also what we're seeing, which we see all the time, is that the banks or anyone who carries capacity, balance sheet capacity, are now really becoming the product manufacturers.
Yeah.
And their various distributions, whether you're in the wealth market like a wealth platform or a financial advisor, or you're in the retail space like a personal finance app, actually they become key because they can analyze what the customer really needs. And then we go to a bank, and we're already doing this with a number of our banks, and say, this is the type of product that we need. And most of our banks, not all, obviously, are very receptive, and they just have a long time lag to deliver a new product to the market. So we think that there's going to be a huge amount of innovation around cash management, cash savings, and actually products coming to the market. And we can see it all happening now. And like you mentioned, your co-founder said, it's just that the market is going to hit the market probably on a scale in 3 to 5 years, because the distribution rollout process is quite complicated due to the regulatory implications.
Absolutely. I mean, the wealth tech space is blowing up, isn't it? I mean, there is a huge amount of opportunity in that space. But I mean, for the uninitiated who was listening to this, I mean, what is wealth tech? Can you kind of give it a bit more flavor?
Yes. So WealthTech, similarly to FinTech, which has had a focus on banking, and InsurTech, which has had a focus on insurance, WealthTech is focused on essentially the wealth market. But for me, that is both wealth and really extends into the retail market. And historically, I don't know, it depends on who you deal with as your financial advisor, but historically, wealth is only focused on your investment assets. So, you can invest in the stock market today as a general investment account, or you invest through your retirement assets, where either through a workplace pension or through your own, like a SIP or SARS, which are other what they call pensions wraps in this country. But it's only been in investment, and cash sits in those portfolios because it's part of a risk-based approach, but has just done nothing. Mm-hmm. Literally, it's given minimal return and has had no activity because it's just been too hard.
Yeah.
And so WealthTech, we focus specifically on cash and the solutions around cash, the prompts to investments around cash. But actually, WealthTech is much broader. It's about, why do you only see your investment assets if you go and speak to your advisor or log into your wealth platform? That's very strange. You have a range of assets, so why do you not see them all?
Yeah.
You have a holistic view, and then even your property, why is that not in one place along with your liabilities and so on? And in this day and age now, where we are with open banking, we've seen obviously the pensions dashboard is coming into play now as well. And you would say that is going to drive a massive shift in WealthTech. And that's driven right down to workplace pensions, where someone who is not in the typical wealth, high net worth market will also be able to receive personalized products, prompts around their lifestyle. And I want to give you an example. For instance, typically, the investment sector has focused on what we call the accumulation phase, which is when we're building assets for retirement. And obviously, when you hit retirement, you're in decumulation. You're now utilizing those assets. And there have been very few solutions during that phase because, your money's being paid out, you're spending it on your lifestyle, and that's it. And we are now starting to see a number of initiatives. So if you're retired, you've paid all your bills, you want to keep some cash aside, but you should have a prompt that says, you're 10% ahead of your spending. You can, take the grandkids out for a special meal or whatever it is that you've defined as your value-based criteria. That's the one.
Well, as you say, it's putting people in much more control at that point, isn't it? Because, I think the wealth management space has been, the distribution for it has been kind of old white guys with briefcases, essentially, really, let's be honest with you. So like the idea of a digital platform for wealth, the complication always with wealth is that the way in which it manifests itself is through extravagance, essentially, isn't it? If you go to Coots, there's koi carp and marble and and lovely biscuits, but actually representing that in a digital manifestation of that is very hard to replicate, like thick carpet and thick paper in a digital world. But I completely agree with you. It's not about the products, it's about the service, isn't it? It's about the thing that makes you better off, because by being with that organization, your money is being put to better use. I think a lot of people miss that, though. So it's great to hear you're really sort of focusing in that space.
Yeah, and I want to say that we see a lot of quite exciting initiatives from some of the bigger banks that manage wealth, because there is a huge shift, like an intergenerational shift in wealth that is coming their way. And they know that the next generation is not going to be as interested in personal, in-person, white glove services. They're going to want that data personalization. They're going to wonder why they can't see all of their assets, why they don't have some curated marketplace. And the other thing that we're seeing is also, obviously, we always talk about ESG and that movement towards value-based, whether it's savings, investment, or whatever. And all of that comes from data.
Yeah. It does, and it's interesting, isn't it? To your point, the retail market, the lower end of the SME market, has been very quick to be disrupted by fintech. The changes that have kind of come along, the technology that's come along, the Monzos, the Starlings, the Tides, the Coconuts have really sort of changed that market in terms of how it is. But arguably, to your point, the wealth isn't just for like old people. Like actually wealth is kind of changing hands quicker than ever before. And actually that change of, money moving from a 70-year-old to a 30-year-old, well, that generational leap then in the expectations of that 30-year-old in terms of how they engage with a company or what their expectations are is in terms of the advice or the even just like down to just digitally being able to access that, as you say, it's the wealth market is really up for some disruption over, I'd say over the next 3 to 5 years, it's going to change completely.
Yeah, and it's very exciting. We're seeing the change now because obviously a company like ours, because we are white label and API first, we get involved at a very early planning stage. And so we can see the appetite in the market right the way from the large platform players all the way down to the banks and the retail outlets. So there's definitely that shift is coming, and for us, the consumer is ultimately going to have a significant benefit across that whole space.
Yeah, there's some interesting questions actually over on LinkedIn sort of around that, because there's one particularly from William Blackett who says, hello William, how do you segment your customers? Is it traditional market-based segmentation, or are you looking at sort of something a bit more sophisticated? Because I mean, the way in which you structure, I mean, very often, I mean, with work that we've done around jobs to be done, people initially just go, well, you've got this amount of money, therefore you go in this bucket. And, similarly to what you found before, it's like, well, you've got less than 100 million. So you're not in our, we don't keep those ones. But obviously different types of wealth has different requirements. And obviously to your point, the aspirations of where people really want to get to will dramatically change the type of advice or the type of guidance that they really need.
Yeah, absolutely. So what we do is we actually work very close with our distribution partners, our clients. So our client would be the wealth platform or the retail provider. And we look at their specific requirements relating to segmentation, which is quite variable. So we, for instance, are working with a large bank which deals with ultra high net worth individuals. And then we're dealing with IFAs that deal with high net worth, as well as the retail outlets. And within each of those, they have their own segmentation requirements. So as an example, one of our very large, they're in the top 10 IFA firms in the UK, they've got two types of segmentation. One is for their high net worth clients that deal with advisors, and one is for what they call like a bionic cash solution. If you just land on their website and maybe you just want to start feeling them out, because historically financial advisors have lost out if they can't give you a home for your cash, like a holding home, while you may be deciding, do I want to go into the market? Do I want to be investing in property? So we give them that engagement tool that then enables them to then prompt the client towards investments or allow them to keep it in cash for that period. So that segmentation is quite variable. And I mean, we're talking right the way down to a retail outlet that's saying, well, could you do £1 minimums in terms of a cash saving product? And if you know anything about the cost of anti-money laundering and KYC, for us to be able to answer that as a yes is a massive testament to our product team, to the way that we look at propositions.
Yeah.
And that's another thing that's quite crucial and that we are seeing in fintech is the investment world has always looked at propositions in a very complex way, where you spend a huge amount of time looking at the regulatory solution and the structure of the underlying product from a capital and a risk perspective. And only then, over sometimes a year or 2 years of production of the product, roll it out and do the technology deliverables or find distribution. And so we see that kind of time and investment in the regulatory legal structure as well as the technology platform is what's going to pay dividend for consumers. Yeah,
definitely. And just sort of sticking on that AML point, the money laundering point, because I think a lot of people don't see that in the cost of operation in terms of sort of making these things. So can you sort of explain that a little bit more? Because I mean, obviously the organizations have regulatory obligations, and actually just purely from a risk profiling perspective, have to be really sure where the money's coming from, don't they? So
absolutely.
Can you expand that out a little bit more?
Yes. So I think the first, everyone knows you're used to filling out gazillions of forms when you open a new bank account. And so a company like ours, we take away all that friction. That's a key part of our process, particularly COVID world. You can do all this from your sofa. There's absolutely no forms. So literally you can sit there with your phone and onboard via our partners. If you're an individual, you can come directly to us if you're a business, but we only work via wealth and retail partners for consumers. So when you are doing that whole process, the anti-money laundering requirements have any company that's opening a bank account for you or on your behalf has got to comply with those requirements, which at the minimum mean you have to do what they call a PEPs and sanctions screening. So the sanctions list is a published list, and that's really, you know, are you some sort of dictator, oligarch, or terrorist, really is where the focus area is, because no government wants to have terrorist financing flowing through its regulated banks. And doing that, you can do it via API, but there's a cost.
Yeah.
Because someone is maintaining that list and someone is giving you that list via API. I'm just using sanctions as the base.
Yeah.
In the second check.
Well, just on that first one, and that's not just a one-time thing. That's not like a bouncer letting you into a club. That's something that you've got to do on an ongoing basis, because, you know, good people go bad, don't they, in terms of those things. So you guys have to manage an ongoing almost a refresh of all of those customers to make sure that the money is good all the way through that process, don't you?
Yeah, all the way through. And then obviously the second, which is more basic, is just impersonation. Is how do I know David Breer is David Breer? And for that, you know, there's a whole range of tools, you know, which help take selfies and so on. But the key here is that the customer they don't know about any of that. It all just happens instantaneously in a very smooth flow. From our perspective, whether you're a business or an individual, we take money from wraps, like what we call the SIPs and SARSs as well. And you just have to simplify that process, but then find a commercial model that can make it work at small levels, like the retail level, as well as at the wealth level, which is much easier. And I mean, we hope to see even more change in society around, you know, AML and verification of identity and so on, because it's still very inefficient, even with efficient tools like ours and underlying data partners that we use.
Yeah.
So, but there's a data protection issues which you always have to keep control of. And that's the other thing, which is very interesting when we work with our partners. Obviously, we have to comply with AML legislation, which you could argue is almost like this invasion of your privacy, the amount of data someone wants about you. And at the same time, we have to comply with data privacy legislation around GDPR.
Yeah,
so it's a very delicate balance. Exactly. And then when we're working with partners, whether that partner is a bank, a wealth platform, they also have got their own privacy. And are we sharing? So the complexity behind the proposition that has to be simple to you can take some time.
Yeah, it is. It is a very complex setup. And obviously, when we're talking about particularly large sums of money, then the risk that's involved in that is much more significant for those organizations. So they need to feel very comfortable there. But I mean, how was the COVID period really sort of affected? I mean, not just you guys, but actually the industry more broadly then, because I mean, obviously the wealth space, you know, the distribution model in predominantly is still people. So, you know, I very vaguely remember like a man with a briefcase turning up to talk to my mum and dad when I was little, and like obviously that can't happen in a COVID world right now. So I mean, how has that changed it? And do you think it's sort of exposed almost the fragility in the technology in some of those places, which actually, I mean, will be to your benefit because the whole world is moving towards digital and you guys are already there?
Yeah, it's been brilliant for us and other players in the wealth space, because where some things maybe were lower down the decision making in terms of priorities, now they've instantly ramped up, because you must be able to do everything digitally. There's absolutely no question about that. And your customer must feel that you are able to do that. And I mean, even right the way through, because you were talking about risk there, we also have a whole range of risk tools for clients who want to manage certain risks, like counterparty risk. So we partner with Fitch. They have something called financial implied ratings, which rates all more than 23,000 banks globally. And you just don't get that at all in the markets. So there's a lot of elements of that. So I would say in terms of COVID, there's been a movement to cash and, you know, like lower risk type of assets. That's the first thing. There's been a movement digitally. And that's not just for us. We're seeing that across the entire sector. And we think that the wealth sector has responded actually very well in terms of rapid change, in terms of the way their employees work. Like one of the propositions we work on, they ordered a couple of thousand laptops. You can't even comprehend as a startup. And that trend will continue. It's not going to change. In addition to, obviously, there's a massive change in the workforce expectations and how we are going to work going forward, which is another huge shift in the way the sector works.
Definitely. And how, for you guys particularly, I mean, how have you, you personally and you as a company, dealt with COVID?
Yeah. Well, for us, I suppose we're a startup, and everyone could always work from home instantly. So that was quite good, because we was just working, but we just never had all work from home at the same time. So that's the first thing. And as a startup, we had, obviously, like anyone, we've had sort of cultural changes where we've been looking at coffee dates and having a fun chat and quizzes. So, the casual, like trying to replicate that casual round the water cooler style. And it is something that we have seen in our company and in the sector, that a lot of bouncing off ideas really creates that innovation and agility. So I think that we are going to have to come up with something as a sector to ensure that that's stimulated going forward. But we've adapted well. We work with a number of partners. I think most of them have adapted well. There was a hiccup with a few of our banks right at the beginning, because we obviously work with banks as partners to deliver their products. And, they were like, we still got some manual processes. We're still going through a transfer for working from home. And so they took a little longer than usual to respond to us when we needed. But they seem to have sorted that out. And I would say that the banking sector seems to be in reasonable shape in terms of dealing with clients now. And I think we'll see more and more digital propositions rolling out.
It's exciting. I mean, the wealth space as an entirety, I think, is in for a really exciting couple of years. And I think there's been a real big push towards what you guys are doing, which is amazing. So congratulations with all the success with it and everything that you guys are doing. I mean, where can people find out a little bit more about you and all the stuff that you guys are getting up to?
You can go to akonihub.com. And the easiest is, if you want to speak about our wealth and our retail propositions, to email me, Felicia, Felicia at akonihub.com, or tweet me and we'll get back to you, because that's out of propositions we work, in detail with our clients on.
Fantastic. Well, thank you very much for making the time today.
Thank you, David.
I'm afraid that's all the time. I mean, it's just 9 o'clock, so we better let everybody get on with their work. But it's all the time that we have for you this week as well. I know everybody's going to be looking forward to the weekend, but I've got the whole week off next week, so I'm even more looking forward to the weekend. So next week we will be back, but I won't be back. So Simon Taylor's going to be on hosting duties for you guys next week. He's going to be talking to Ross Laurie, who is the CEO and co-founder over at Visible Capital, doing some super interesting stuff. And don't forget that Sam will be back every Wednesday, which is going to be at 3:30 BST or 10:30 a.m. ET if you're based out on the East Coast of the US. So keep track on all of those things, keep track on the show, but I'll see you in, well, I guess a week's time. Have a great weekend, everybody. See you later.
Have a great break. Bye.